give her another round of applause. And please give energy, engagement, and just be very attentive for this panel. Silvia, the floor is yours.
Thank you. Good morning, and thanks for joining. I know it's the last days, we're trying to gather the last energies, but there is still a lot of good conversations ongoing, so stay with us. We will be covering with this panel a very important topic, which is market reforms. We've seen a momentum across the continent with a lot of countries that are introducing reforms on the power sector side. There is, as I said, a good momentum, still a lot of things to address, many more new policies to be introduced, and we will be discussing this with this esteemed panel. Iyunola, maybe we can start with you. What changes have you seen in the past few years? So do you agree that there is a momentum for market reform? What impactful changes have you seen, and what there is still to focus more on?
Okay, yes, I think that we have experienced real momentum when it comes to regulatory reforms on the continent. For example, Nigeria's Petroleum Industry Act, Nigeria's Electricity Act. I think that one is particularly interesting, a bit more recent than the PIA, but what it does that I think is rather transformative is it devolved the power to the state governments. Historically, there was some sort of monopoly when it comes to power in Nigeria, electricity. It was governed, regulated by the federal government. But what this act sought to do, and has indeed succeeded with, is it's devolved the power, it's devolved the regulatory and operation of electricity to the state governments. That's particularly attractive to investors because it's bite-sized, it's easier to manage, it's easier to plan with, it's easier to anticipate what you're getting yourselves into. State governments like Lagos State, Oyo State, Ondo State, about eight, have already started to operate their own power. And so that's quite transformative. And I imagine that a lot of other African countries would want to replicate that format. In South Africa, there's also been the reform where, ESCOM historically had the monopoly, but now private companies are allowed to also operate power. And we're starting to see how that's impacting the landscape. So yes, we have seen reform. What are the issues? There are always issues. Unfortunately, we're not necessarily seeing implementation in the way that we would like. As a lawyer, I can tell you for free that the laws are not the problem. We sit down, we put the laws together, we tinker, we tweak, we amend, but if we are not implementing, then it doesn't amount to anything. So yes, we're seeing implementation, we're seeing progress, but I think fundamentally what investors would like to see is more implementation, less bottleneck in terms of red tape when it comes to the licensing. Those sorts of things are still need some work. So I think that's what I would say the gap still is.
Thank you. Mashale, you're bringing the private perspective to this panel. So market liberalization, what has been helping projects, or how can it help projects get de-risked, and how can that help also accelerate the timeline of project execution?
Okay, thank you. Good morning, everyone. I think from a private sector perspective, we've seen a number of important success stories. I think we need to remember that the traditional model of this state-owned generation, transmission, distribution is how we all started off. In the last decade or so, we've seen quite impressive programs like the REAP in South Africa, the MSB in Namibia, and we've also had similar generation liberalization focused programs in Botswana and Zimbabwe. So that has all been very successful. On a slightly different level, the Southern African Power Pool as well has really come into its own in the last decade or so, with private sector players now participating from the generation perspective, of course also the trading of electricity, and really allowing the private sector to facilitate the trading and access of electricity in the region. So from a generation perspective, I think things are going well. There are still places where it can improve, but I think at least regionally we're moving in the right direction. In terms of what has been challenging, from a private sector perspective, we require the states or the government to facilitate private sector involvement. And that cannot happen for as long as, for example, transmission and distribution is still owned and controlled by the state. The key element here is that you need to create an environment that will facilitate investment. And we have significant bottlenecks when it comes to transmission. I think that's, after generation, that's the next area that's the biggest issue, in that, there are a lot of players able and capable to generate power, but transmission is still not liberalized. So what does that mean? It means that in some areas, the private sector cannot facilitate the flow of energy to where it needs to go, or alternatively, they cannot build the transmission infrastructure that needs to be put in place. So just to wrap up on that point, I think at this stage, the transmission is quite key, and we've seen a significant success story in Zambia with CEC. They've been able to own the transmission infrastructure and facilitate power to mines in both Zambia and the DRC. So it stands as an example of the potential that the private sector has to play in the sector.
Yeah, thank you. And you're highlighting that usually when we talk about market liberalization, we tend to focus on the generation side of the business, but it's important to get that liberalization happening all across. And thinking of all the different areas where there is need for private participation. Rita Jo, you have a long experience in multilateral collaboration and partnership. So what can the governments do to lower the perception of risk, be it political or on the market side? What can they do?
I think I'm going to take a different approach in the sense of understanding the federal and the state and local. I was very fortunate to have spent a lot of time with governors and mayors and local elected officials, as much time as I did on the federal official side. I spent over 3 years as the head of Exim Bank, and our principal agenda there was to get deals done. And in those 3 years, right here on the continent, we were very fortunate of moving from having done 3 years prior about $109 million to over $3.6 billion. And we were doing that everywhere from Angola to Cote d'Ivoire to Egypt, you name it. And that also required us to engage with a lot of people, and many more so than we probably had done in the past. And so when I say, how are we looking at getting deals done, to me, it was about who were we collaborating with, not just the federal government, because that's just one part, a piece of the puzzle. as they were doing federal to federal. And most importantly, as I had said, when they would come in with their projects, where does the Minister of Finance, who is taking her or his directions from the leadership of the republic or the country, what are they saying in terms of where the priorities, where is the priority? So if the private sector was walking in the door, just the project sponsor, I would look to see, well, who were they bringing with them? Separate from federal, were they bringing their leadership at the state level? Because at the end of the day, you got to execute these projects. It's just not about having a good project, but is the project going to be executed to the end? And so I took a page out of the work that I had done in my previous career in terms of working with governors and mayors, and I said, there's several things that we have to look forward to, and at each rung of this ladder, everyone has to do their job, or they have to come in and show, one, is there some serious clarity around these big, large-scale projects that people want to do? And when I say clarity, I mean, who's really owning this? Where does the sovereign first sit in this engagement? Because once you can tell me where the sovereign sits, I know we begin to have some clarity right there, because then I know it is a priority for the country. And if it is a priority for the country, that means that in the national plan or in the plan that has gone before the legislature, everyone is at least, when those reports come out and they say this is a priority, we can have confidence in knowing it's a priority. I don't think they were lacking commitment. That would be the second thing I would always look forward to, because I think people are very committed to the project. All we have to do is just listen to these numbers, and we understand the dire sense of urgency that we have to place on getting this stuff done. And so the commitment is there, but then it comes down to what's the confidence that is going to make capital flow into a particular project, into a particular country. And I would tell you the private sector partners would run in first, and many who we probably dealt with over the decades, because they wanted to see the Export Credit Agency or our other financing tools in the U.S. government, like DFC, like our U.S. Trade and Development, our other agency, other departments like Commerce and Energy. They wanted to make sure that the government financing tool, which was EXIM, one of them, that provided loans, guarantees, and insurance, was going to send the signal that we would be willing to do this particular project. Now, to send the signal, what does that mean? We've got to see all these players, because we got to see these great and wonderful plans transform right before our eyes, because we have to do our work too. We're looking for bankability, and we've all heard enough of that this week, but we are. And if we're looking for bankability, why are they coming to the U.S. government financing institution? They're coming because that means that we're willing to put our stamp of approval on that project, that we have looked at how can we even co-finance with others, even definitely on the continent. We spend a lot of time, and a lot of time is going to continue to be spent. All you got to do is just, as they say, look at what's happening, that the EXIMs in the U.S., the EXIM in the U.S., the DFC in the U.S. is still working very closely with Afri-Exim Bank, with AFC, with the Development Corporation, with Africa 50, because on the continent, they understand the continent even better. And so if you can co-finance and spread that risk around, we're all looking to be able to do that.
Very good points. Thanks, Rita. Mashale, you already touched upon on this a little bit, but let's look back at procurement. The procurement process is really, really important. No matter whether we look at generation or transmission distribution. So based on your experience as a private sector player, what is the status of the procurement process across Africa or in the markets where you've been active?
Thank you. I think we see a variety of circumstances. From a procurement perspective, I think that there are a number of key elements that private sector players would like to see. And these, I guess, come from the constraints that we've experienced. One of the big ones is the licensing and permitting. Now, one of the challenges we do have with these projects in the energy sector is that there are a variety of licenses required, including securing land, environmental authorization, grid access, etc. And it is difficult when you're operating in an environment whereby you need to rush from here to there, the process is uncoordinated, and the actual departments may not actually talk to each other. So Iyunola spoke about implementation being one of the key issues, which I fully agree with. So we need to be able to offer solutions such as one-stop shops, whereby there is a single government agency that can facilitate the whole process, preferably available on an online platform, such that the process is transparent and it's faster, because the difference between an investment or not is if you can do something in a year, which would have taken 3-4 years, it's going to attract a lot more investment. One of the other areas that we find is that something that worked very well in the REAP in South Africa is that they had a standardized PPA, which the whole ecosystem got comfortable with. The banks were comfortable with the structure. The government understood how they were going to facilitate with the risk mitigation. So we'd like to see more of that in the market, because in countries where you don't have these standardized templates that the industry understands, then you're losing out on that ease of doing business and the, let's say, everything being easily worked through the system. And lastly, the last point I'll make is perhaps not directly to do with procurement, but I would say we need to be able to facilitate the private sector to engage directly with other private sector players. So if I'm a generator, I should easily be able to sell to an industrial user somewhere else in the country. Why is that important? Because what you do find with our utilities is that unfortunately most of them, they do not have the best credit rating at this stage. So, you can't exactly sell to them and rely on them as an off-taker. But there are many credible market players. So facilitating, wheeling, enabling that type of legislative environment, I think it's a very key thing that would facilitate the private sector and champion more generation. Yeah.
Reta, Joe? Yeah.
Well, one of the things that was always in the discussion was about time. And when you deal with the private sector, it's like time is money. Yeah. And time is money for both the investor and for the government. And one of the things I want to piggyback on his comments is that he is absolutely right. It's all about that one-stop shop for permitting and also for approvals. Now, we say we should have one-stop shops, or asking the states to have one-stop shops, but the federal government also has to have that one-stop shop. And what I have seen that has worked has been what we would call whole of government, whereby our because energy is all about national security now, and we would say, economic security is about national security is about economic security. So under that umbrella, our national security team would bring all of the financing tools and all the economic focused agencies together to make sure that when the private sector did come to deal with the federal government, they didn't have to try to figure out, well, who does what? However, that still persists, no matter how you try to slice it. But the most important thing, if they understand that the federal government has the ability to pull all the agencies together so that you're not necessarily approving agreements all the same, because every agency is different, but at least you're speaking with one voice. So the federal government speaking with one voice as a whole of government, going to the state and local level, making sure that they're speaking with one voice inside of their state, because same thing, a lot of people got their hands on it, a lot of people think it's their priority, and when it's not, because at the end of the day, we want to see states establish, the single window office that brings together the environmental approvals, the land rights, and the grid connection processes, because that allows for uncertainty to be reduced and any delays from the private developers. So going to the point of your first part of your question about procurement, it's also about that trust. If we've seen if government, federal or state or local can do it to help level the playing field for our international and our local firms, then people are more willing to come and ask us to help assist them with their next step. And the next step is always about the financing.
Since we're talking about, again, the collaboration on how the private sector and the public sector have to work and to move the market forward, just Rita, again, how do you see the private and public partnering together? Is it possible?
Imperative.
And how?
These projects are so large that you have to have the public-private partnership. It's essential. We saw that with, I'm sure many of you might have attended the Angola briefing on the technical briefing about what's going on there. To be able to pull off a $1.3 billion solar project, which is in the renewable energy space, it is required for the private sector companies to be working, not just the international private sector companies, but to also have that local participation. Because when you go to the government, what is the principal thing they're also talking about? Not just in terms of getting the project done, but they want to see what's the local content. They want to see where are the local players. They want to make sure that their SMEs are participating. They want to make sure there's some involvement for women empowerment or youth empowerment. And then at the end of the day, it's all about all of that, about who's creating what job. We could not do one project on the federal level in the United States, XM, without the major job component. And it doesn't matter which elected official you're talking to, that's one of the first things that they're going to leave us with. So they look to the private sector. The private sector is the creator of the job. The officials may be the driver of the economic engine, but the private sector is the one that's creating the job. So you want to make sure that you're telling the story about the skill development. You're talking about workforce development. And now, of course, you're talking about as workers are being displaced by technology and AI, what are you going to be doing to empower the new worker to reskill or upskill these workers? And that's going to require private sector participation. That is not going to just be, that's not government's job. That is the job of all of us in terms of making sure that at the end of the day, the project does exactly what it's supposed to do.
Can I add something to
Please,
that real quick?
yes.
Just speaking about PPPs and collaboration, I think it's also very important to identify that with PPPs, I like to think of it like a marriage. The government is the husband, and the private sector is the wife, who's pregnant, by the way. It's a pregnant wife. And I say that because if you think about a pregnant woman going for antenatal, having all kinds of discomfort during the process, the husband is supposed to protect and assist and step in, make things comfortable, right, until birth. In the same way, the government should ease the pressure in making regulatory risks disappear, in making whatever strain or discomfort that a private sector who's coming into the PPP would experience disappear. So that is the support that I think the government should provide in that scenario. And then at birth, when the baby is born, when the project is about to birth, the government should be right there to support the private company or the private players to ensure that it's a safe birth, safe delivery, right? And to be very honest, post-delivery, the government should be within safe distance to provide whatever support is required, because that is a product of both parties. That is the collaboration. And I think the more we think about these things in that way, if we simplify things a little bit and take away the technicalities for a moment, it might be easier for everyone to understand their roles and to act properly in those particular roles. So collaboration, I think, is fundamental, but everybody has a role to play. Yeah. And PPPs are very important. 100% I agree. Just wanted to add that.
Thank you. Yeah, I wanted to switch gear, change a little bit the focus of the conversation, because we haven't talked about tariffs, and I know that it's a hot topic that nobody wants to talk about. But most of African countries don't have cost-reflective tariffs. It's difficult to make an attractive environment for investors, keeping the affordability aspect. So Iyunola, how is it possible for governments to strike that balance, and how?
Again, collaboration. And I think when we're able to fully answer this question is when we're able to answer the question or treat the issue of energy access. On the one hand, the investors want to see cost-reflective tariffs. On the other hand, you have consumers, particularly like in low-income communities, that are not necessarily able to afford these rates. So what do you do? I think it has to be a lot of innovation. Some countries have made attempts. Nigeria has attempted to introduce various levels of subsidies. I think Kenya has also brought in some rural electrification model that they're trying out. It will take some trial and error. It would take trying different models, trying different approaches, but fundamentally working together. And I think one of the things that could be prioritized, or maybe even just considered at some level, is we have, like we said earlier, a growing demand, but supply is a problem. Now, the cost of the supply is another problem, because you want to keep the investors happy, but you also need consumers that can afford to consume the product. So how about you mix it up a little bit? You consider a hybrid approach. We've talked about renewables throughout this conference. Do we want to consider a hybrid mix of renewable energy supply? Would that be more cost effective? Would that be an easier or more affordable option for low-income communities? And so we are channeling the power from renewable energy supply to those communities so they can afford it a bit more. Is that something investors would find more palatable? I think those are the kinds of questions we need to start to consider. Maybe from the outset, the supply should not just be from any one source, but consider a variety of sources that may be a bit more cost effective and make it easier to have cost-reflective tariff, and also for consumers to afford. So hybrid approach, innovation, there are lots of innovation, but fundamentally, again, collaboration. That's what I would say.
Mashale, do you think it's possible to strike that balance?
Yeah, I don't think it's only possible, I think it's imperative. If you just look at the general impact of not having a cost-reflective tariff, starting with the generation side, right? Yeah. If you do not have cost-reflective tariffs, you are not going to have an enabling environment for people to come and invest in that industry. That's the first thing. So you're going to limit your amount of generation. It is well understood that particularly from the, let's say, the political side, there's always an incentive to try and keep tariffs as low as possible. What I believe is that we should try, if we're going to subsidize any particular group, etc., it should be an open subsidy, which should not sit within the tariff. So what do I mean by that? I mean, whether it's the utility shouldn't have to bear that burden, the generator shouldn't have to bear that burden. The government itself should subsidize that particular area, because at the end of the day, you have that subsidy in the wrong place. The second thing I just want to say on this important topic is that we need to look at it from the perspective of, to facilitate cheaper tariffs or just a cheaper energy environment, you need to optimize the energy environment. So that means that we need to have a regional framework of infrastructure. We currently have one, but it needs to be strengthened so that where power is cheapest to produce is produced there and it can flow to other areas. So Namibia, Botswana, South Africa, very good solar and wind resources. People in, say, DRC should be able to benefit from that through the Southern African Power Pool. The infrastructure and the platform is already there, and vice versa. The huge hydro resources in DRC, Zambia, Mozambique should also be able to facilitate elsewhere in the region. So I think if we focus on those kinds of approaches, we will be able to get eventually better tariffs for everyone, but the cost reflectivity is quite critical.
Rita Jo, I'm thinking here we're talking about how private and public should collaborate to make projects happen, a hybrid approach to keep affordability for the people as well as attractiveness for the investors. We've talked about knowing who you're going to speak to. Am I missing something more? What is still missing in the reforms at the moment, or what hasn't been looked at yet? That is still...
all of the above, and then we got to definitely go to the community. The community has a major stake in wanting these things to get done. They're the ones that's lacking the electricity, or they're the ones that are not able to have the type of job that they would like to be trained for. And one of the things, this comes in, you know, I would say when we're looking at a loan, or the due diligence that has to play when you're looking at ESG, and you're trying to understand where that balance is between what's going to happen, you know, environmentally or socially. But the people have a voice, and they use it. As someone, I think NJ said, you know, they have a voice. That's where the transparency comes into play, to make sure that everyone has a seat at the table. And as they have that seat at the table, they're going to say things that you might not like. Or however, they may tell you things about your project that you do not know, that you need to know. So that's why you've got to have that openness to listen, because everyone has a stake in these major, you know, major projects. I mean, I look at a project that is still continuing to go on that we started in terms of the Libido Corridor, that is the rail transport project that is going between, I think it's Zambia, Angola, the DRC. And along that, it's not just about going in and getting the minerals and taking them out. It really is the whole ecosystem that is going to be supported, that needs to flourish and thrive around this major type of transport project that is going to be put in place, that is going to definitely create jobs. And you got to go to the community. They know their community better than any of us. And I think we do ourselves as officials a disservice when we're not going to them every step of the way, not just at election time, or not just when the project is almost finished and everyone wants to celebrate, because there is so much work that have to be done. To me, that's the additional part of the collaboration that has to take place. And I've definitely seen private sector entities be a lot more involved with going to communities in order to support the big projects that they're going to have. Because a lot of these projects, we think they're great, but they can be very controversial. And with that, the only way you're going to get, I would say, buy-in from everyone, it's not just a project for the officials. It's not just a project for the private sector. It's really there to serve the people. And in serving the people, you want to hear from the people. And the only way to do that is to go to them directly, and a wide swath of them, not just, let's say, that little narrow group that may be, voicing their opinion the loudest, but for those who are going to be the ones that's going to use that service and benefit from.
One last aspect before we wrap up with Iyunola. How important is the independence of the regulatory bodies for market reforms, market liberalization, attractiveness for business?
I think it's very important. I think it's the backbone. I'm not confident that any investor would be comfortable entering a market knowing that they would constantly be at the mercy of politics.
Yes.
That's not anyone's wish. I think regulatory independence is a strong signal that things are working in a particular environment. Kenya seems to have a really good reputation when it comes to that. They seem to have their energy and petroleum regulatory. They tend to, they have the capacity, they have like a strong backbone. And so it's easy to work in that environment. It's easy to predict. And one thing investors, what we see a lot is investors craving predictability. They want to be able to forecast. They want to be able to project. They want to know what to expect. And when you have an environment that has an independent regulatory system, you are able to do that. Some other African countries have not been so lucky. I think South Africa has done a decent job as well, particularly since the recent reforms where private companies can now operate. That's, we're starting to see a trend there with investors being a bit more happy with the regulators. But I would say it's very important. It's critical. Yeah, absolutely.
So, yes, please, Mashale.
Yeah, I just want to add on that, just in support. What we've seen recently is a number of independent regulators being put in place in order to achieve the objectives of independent regulation. However, one of the issues that we're still seeing is that some of these regulators operate as a parastatal. So it's an independent body, it's set up there. However, the board members are put in place by the ministry or that kind of thing. So we need full and complete independence because, as private sector, we want to be 100% sure that the regulator is fully independent. And it talks to cost-reflective tariffs. It talks to equitable market access. It talks to, not having to be worried about dealing with the utility because it's also state-owned. So I think that's one key thing that, we've seen this transition, but when you look behind the curtains, it's the same people. Yeah.
I think, piggybacking on what both of them said is that we've seen that the private sector definitely wants to see federal and state government invest in an independent regulator because that is one way that they can address the perception of risk. And she's right. If the regulator is at the whim of the politics, then that is going to still yield that level of uncertainty that is going to continue to scare the private sector away. And so you've seen different regimes deal with how do you give them more authority, but yet still have accountability? You want to also then give them, you want to insulate them from the political cycles, and then you want to make sure that you can fund them so that they can actually do their job properly. So when you kind of look at that, the areas that are required for an independent regulator, you kind of like look at where are the best practices. And we have definitely seen some really good practices in the US. I've seen some at the federal as well as at the state and local level. And that just gives the private sector a little bit more certainty that if they are involved in these projects that are just hundreds of millions and billions of dollars, they're, at the end, they're going to be successful and not be at the whim of politics.
Thank you. So we have a couple of minutes. When we talk about market reforms, and we know we're talking about a complex process, a long process. They don't happen overnight. Particularly the power sector needs time to adapt to the changes, right? It's also the last ring of the chain. Everything has to happen upstream and eventually get some impact on also on the power sector. So I wonder, after this conversation we've had and given your experience, is there any low-hanging fruit out there for the African countries in terms of reforms, or we're still looking long-term? And if we were to have this conversation next year, what would be, if there is, I mean, I'm not sure that there is, but do you think there is a low-hanging fruit in the process of liberalization and reform? Difficult?
I mean, I think at the end of the day, we gotta, you're right, the private sector is looking for proof. That's really what they're looking for. A lot of the projects that we're talking about are long-term projects. So they're looking for proof along the way, along the ladder of to the end of the implementation of the project. So I think we can, we should look at mapping some of these projects so that we understand, you know, from inception to implementation where they are. I've just recently been in some conversation on the Nigerian governor's front where they just launched a whole investment wheel around Investopedia, where they and the 36 governors are mapping out the types of projects that they're looking for. They're looking at where are the financing that's going to take place, but also they've got to map every bit along the way of everything that we've been talking about, the procurement, the transparency, to build trust, and then in the projects that they want to execute, and what are they going to be willing to do? I think if we can map some of these projects throughout the continent and be able to show a proof positive, we should be celebrating when we see those kinds of projects, because that is going to prove to the private sector that it can actually get done.
Yeah.
Absolutely. Do you want to add something?
Yeah, I think one of the lowest hanging fruit is what's happening, or what we're trying to do in Botswana, which is have everything online so that there's full access, everything is automated, and it builds confidence in investors when they can go online and see the status of their, say, their permits. They can see who holds what process it's sitting at. That will help a lot, together with the one-stop shop. That I would say is low-hanging fruit, yeah.
Thank you.
Okay, in very few seconds, I'm just going to add to what has already been said. I agree completely. Transparency, trust. I think that's probably free. Trust is free. And sometimes you can argue that transparency can be costly. So trust, I think, is a very low-hanging fruit. If we're going to have a one-stop shop, if we're going to present on a website that you can do this and do that, then let us truly be able to do this and do that. So I think a low-hanging fruit is trust. Let's allow the people to trust everything that we're saying.
Thank you very much. Please join me in thanking this panel for the insightful discussion. Thank you. Thanks.